Hey YouTube, it's been a wild ride. The world is grappling with a health crisis. But in terms of stocks, you don't have to worry. As long as you buy high quality companies, you can just buy and hold and just stay at home and sleep basically, because these high quality companies will do the heavy lifting. The most important thing is take care of health and let these high quality companies do their work. So, the best investment is an investment yourself, but eToro provides an even better way to just copy some of the best investors in the trade. Let's take a look at how the portfolio has done over the last month, and let's take a look at some of the best investors and traders on the eToro platform. So let's run through the portfolio quickly. Amazon at about 17.33%. Intuitive Surgical is next. Then we have Alibaba. We have Google, Mastercard, Facebook, Visa, Adobe, PayPal, Microsoft, Autodesk, and unfortunately we also have Booking and Boeing, which have really taken the brunt of the crisis. But we think that these two stocks are still good companies. Travel will come back someday, and Booking will be in a good position to lead on that front. And of course, air travel will also come back, and Boeing is basically the only other aircraft manufacturer compared to Airbus. So people will start traveling and airlines will start buying planes. So these two companies will come back. We have cash at about 4% plus of the portfolio currently. In terms of the other companies we own, Amazon has been doing very well lately. Basically, people are sheltering at home and so are buying stuff online on Amazon, and that's good for the business. It might take some short-term hits in terms of the profits because it's hiring many more staff and also probably investing in its logistics capabilities more. But over the long term, this will be probably a very positive contribution to Amazon's business. So Amazon is going to do well, and the other part of this business, which we actually think is the more important part, is the cloud computing segment. And again, I think as more companies decide to have stay-at-home policies or work-from-home policies, they're going to have to digitalize their businesses more. And that's where Amazon's cloud computing comes in. And it will prove to be a very useful tool for a lot of businesses. The move towards cloud computing and of e-commerce is going to be accelerated by the current crisis. So Amazon stands in a good position to benefit. Intuitive Surgical is another very good company that we are very bullish on. But Intuitive Surgical is going to take a hit from the crisis. This is because a lot of hospitals are postponing some of the procedures or surgeries they do with Intuitive Surgical's equipment. But we don't think that this will be a long-term problem for Intuitive Surgical. I mean, some of these procedures are elective, but they generally still need to be done. They can be postponed maybe by a few months, but eventually they will be done. And of course, there is the underlying trend of an aging demographics around the world, and so people will need better access to some of the technological products or the robots that Intuitive Surgical provides. Robotic surgery is definitely better for the most part than having a human conduct the surgery. So that trend is another undeniable trend that will continue to grow. It's hitting a speed bump right now, but once the crisis is over, you can expect that demand to return. Alibaba, like Amazon, is benefiting both from the e-commerce trend and also from its cloud computing trend. So we think Alibaba, like Amazon, will continue to be strong. Alibaba has also benefited from the containment of the virus in China, so it probably might even go back to normal sooner than a lot of other companies. So we're still quite bullish about Alibaba. Google also is probably going to benefit somewhat from this crisis, although there is the argument that ad rates will fall and advertisements in general will fall because advertisers are going to be more reluctant to spend in the current climate. But I'm sure all of you are, watching more YouTube videos nowadays, and that can become quite ingrained, and that gives an incentive even for more YouTubers to produce more videos, and that's kind of creates a bond between the YouTubers and the audience. And of course, Google has its search business, which is probably also doing decently, we think, even in this climate. And then Google also has the cloud computing segment, which, for the reasons we stated earlier, will also stand to benefit from the current crisis. Mastercard, again, is a play on the war on cash trend. Basically, more payments will become digital over time. And again, I think this trend will probably be accelerated by the current crisis because less people will want to handle cash. And there's also that need to do more transactions online. So this will probably help Mastercard. Right now, I mean, there might be again a speed bump because less people are spending, especially in retail shops and restaurants and doing travel. But overall, we think the trend towards digital payments will be accelerated. Facebook again is another interesting stock because although for the reasons mentioned for Google, ad rates might come down, but again, I think more users are probably using Facebook than ever, and hopefully this builds loyalty with these users. So when the crisis does subside, Facebook might emerge much stronger. Visa is very similar to Mastercard, so for those reasons, we think Visa is in a good position too. Adobe again is another online business in the sense that it provides software to a lot of companies, and many of these companies will still be able to work with the software that Adobe provides. Many of these businesses use Adobe software for content creation, and again that's probably increasing at this time because for example, YouTubers will want to produce more videos, take advantage of a captive audience. So we don't see a major impact to Adobe's revenue. PayPal is another play on the war on cash, and for the reasons stated earlier, we think PayPal will also emerge from this crisis stronger. Microsoft has its software suite of Microsoft 365 now, as it's called, which formerly known as Office 365, provides Microsoft Office, Excel, PowerPoint, and those are quite established productivity tools in the enterprise sector, and that will continue. And of course, it has the more important cloud computing division, which will also stand to benefit tremendously from the current crisis for the reasons stated earlier. And Microsoft also has collaboration tools like Microsoft Teams, which is also seeing a lot of increased usage, and so that will stand to benefit Microsoft. Autodesk is similar to Adobe and provides software for the manufacturing and construction industries in particular. So although there may be a short-term hit because there will be less construction activity or manufacturing activity due to the global lockdowns, it's still in a strong position to bounce back once the economy comes back to some sense of normalcy. So overall, we think the portfolio is well positioned to withstand the crisis. Let's take a look at the stats for the portfolio. So we are still in the red for 2020, but we have had a strong April, and that was expected after a not good February and a very bad March. The portfolio was definitely going to bounce back, and it will likely bounce back further. Um, Overall, I'm not sure how the portfolio would do for the year, but I think it's likely that we may still be able to be in the green even at the end of the year, because our companies are very strong. Some of them may even benefit from the current crisis, and others are definitely going to emerge stronger once the crisis ends. So the major indices that we compare our portfolio against are the S&P 500 and the Nasdaq 100 ETF. So for 2020, we are handily beating both of these indices. So right now, the S&P 500 is down about close to 12% for the year, and the Nasdaq is down about nearly 9% for the year. So we're still outperforming these indices, and we will likely outperform the indices in the coming months, and of course in the future as well. So next, let's take a look at some of the best investors and traders on the eToro portfolio. Let me give my take on their portfolios. So first up is Spark Liang. Spark Liang is doing well. It's done about 6.90% in April and is up 12% for the year. Very good, especially given the market volatility. We are beating him for April so far, but I suspect that's largely because he doesn't tend to remain fully invested. Let's take a look at his portfolio. So he has Facebook, Apple, Shopify, and Alibaba as some of his stock holdings, and Disney, JD, and so on. So we have a lot of common holdings. Like I mentioned, he is still about 35% in cash. So I think this tends to deflate the performance of a portfolio, because generally cash is not something you want to hold for the long term. So perhaps he's waiting for the next crash, and it may or may not come. But I think generally the best approach is to stay at least 80 to 90% invested. So while you suffer on the swings down, but you also benefit a lot when the market swings back up again. And over time, the market only goes up. So it's much safer to be fully invested, so that you capture all those gains as the market goes up. I'm not sure if I would want to have Facebook as my top position, although I think we actually do hold a similar percentage of it. Apple, I'm not that bullish on, because I think it's more of a seasonal or a fashionable kind of product. But I do see a mode. I may want to initiate a position in Apple if the price is right. Shopify I like, but I can't bring myself to buying it at the current prices. I still feel it is overvalued. Alibaba is another common position that we have, and he also has positions in the payment processors like Mastercard, Visa, and PayPal. Let's take a look at how much he manages as well. He has about 3,230 copiers, and he manages between 2 million to 5 million in assets. Up next, let's take a look at one girl. So how has she done? She's doing quite well in April actually. She's done nearly 12%, actually nearly 13% in April, and she's up 6+% for the year. Very good. So she has Shopify as a top position, and Shopify rallied hard yesterday. Like I mentioned, I'm not going to buy into Shopify at the moment. I still feel it's overvalued. Amazon is a common position, and Amazon has been doing really well so far. Netflix, I don't feel confident in holding because there's so much competition. But at the right prices, I think certain companies are worth owning. But I'm not sure if Netflix is one of them, especially now that it's gone up quite a bit. We have other common positions like Mastercard and Microsoft. She tends to hold a lot of positions, many more than I do, and she tends to make small bets in some very smaller cap kind of companies like Trilio, Roku, Etsy, Zoom, Workday, Plunk, and so on. And some of these companies will definitely do well, but some may not do well. And we don't understand them as well as we do the companies that we already own in our portfolio. And so we will not invest as much into this kind of what we would term speculative companies unless we are more confident about them. And of course, the price must be right as well. Let's take a look at Yepe Kirkmonde. He is actually one of the most copied investors on the eToro platform. So we're actually beating him. He's down minus 10% for the year. And we're also beating him in April, but he is up 7+% in April. He has about 8,000 plus copiers and manages more than 5 million in assets. His portfolio tends to be very diversified, maybe a little over diversified for our liking. He does have Amazon as a common position. He tends to have a lot of positions in renewable energy, it seems. This one and this one. And a lot of disparate positions in different companies. We can take a look at some of his holdings here. He's holding a bit of cash as well. So some of these companies we like, maybe even LV we would own someday if the price was right. Now Microsoft is a common position. Some of these companies we've never heard of. For example, Harbor West. Never heard of that company or this company. Not very keen on owning Bitcoin either. And I think Bitcoin has really failed actually during this crisis. It was supposed to be a safe haven, but it didn't really prove to be much of a safe haven. So the investors we have looked at so far are typical buy and hold investors like me. There are two other investors that we want to go through. One is sort of a buy and hold investor as well, but he also has short positions. We generally will not have short positions because we do not believe short selling will be a better way to return profits to our investors over the long term. So we are going to be solely focused on buying high quality companies for the long term. But he has done well. In fact, he's done quite well for the year so far. He's done about 9% plus for the year. We're beating him in April because we don't short sell, and market has been rallying in April. But it's not doing badly either. It's 6.58% for April. He's been gaining a lot of copiers recently, so it's got 2,000 plus, and he's managing between 2 million to 5 million. What we like about his portfolio is they're not like 100 positions. He's concentrated, and we think that shows some conviction. Again, he has Amazon as his top position. That's in common with us. We don't like short selling, and he's short selling the Nasdaq, and he is down on that. Short selling can be very risky business, so we don't generally want to do any short selling. He's very heavy on the semicon industry. There's a few companies in that industry: Micron, Western Digital, AMD, Nvidia, and so on. We also own Google, and he also owns Google. And he's very cash heavy at the moment. And I can understand, I mean, why one would want to be cash heavy. But again, the stock market doesn't move completely in tandem with the economy. And although the economy will probably head for a recession soon, the stock market tends to be sort of like a leading indicator and tends to move about at least a few months ahead of the economy. So the stock market at least is seeing a recovery, and is pricing that in. And that's why we're seeing the current rally. We'll look at one final investor. He is more of a long short investor. So he has managed to navigate the current crisis pretty decently as well. He's done about 14% for the year, but he is down 2+% because he's a short seller, I think, perhaps for the most part. That's why it's probably down despite the rally in the market. He actually now has one of the highest number of copiers, 9,400 plus, and he manages more than 5 million in assets. So it's dangerous to be a short seller because the market will generally go up over the long term, and it's very hard to time the market. Nobody can time the market to a T consistently over the long term. So it's much better and safer to be a buy and hold investor and to own high quality companies. So he does have some long positions. He also has some short positions, as mentioned. You can see some of the stocks he owns here. So some common positions like Alibaba. He's short selling Tesla, interestingly. He's even short selling Facebook, even more interesting. Short selling Zoom. Okay, and he has about 13% in cash. So although I criticize some of these investors for short selling, I do look to their portfolios. It's very interesting to see what they're doing, what they're thinking. And at the most, if I do feel that a bear market of great proportions is on the way, I might keep more cash. Very unlikely I'll do any short selling, but I may be a little bit more cash heavy. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.